So let's talk about fair value gap, and in today's video I'll try to explain to you guys what fair value gaps are, as it's one of the most important aspect in trading. And in order for you to just make some good trades, you need to understand what fair value gaps are and how they work. So let's open the chart and let me show you guys like the fair value gap and how you can mark a fair value gap and identify a fair value gap and what it does to the market. So I drew a fair value gap over here. So now, keep this in mind that the fair value gap exists on every single time frame, either on 1 minute, 5 minute, or even daily or weekly. There are fair value gaps. Fair value gaps are made of 3 candlesticks. As you guys can see, I just made draw a fair value gap over here because it would take a lot of time if I had done it on the video. But as you guys can see, we do have a bullish fair value gap and a bearish fair value gap. Both of them are the same and they work the same way. So it's gonna take a lot of time if I was just to draw it, but think of it just if the bearish fair value gap would have been, it would have been to the downside the same way. But over here the candles are going up. But now you understand that fair value gaps is always made of 3 candles. So we have one candle over here, we have the second candle over here, and we have the third candle over here. So now when it comes to how do you mark fair value gaps, so there are a few ways that you could mark a fair value gap. I mean, like, there's only one way. So if you were to mark it just like these, let me just remove that, like from there to there. If you can't mark fair value gap like this, that's wrong. We mark the fair value gap from top of this candle to the bottom of this candle over here. This is how we mark fair value gap. And now what we want, why we use fair value gap, because price in the market always is drawn to 2 places, either to fill in a fair value gap or to take out liquidity. Now let's say that what happens like now, let's say the price did just continues go higher, it would have to come lower and fill this fair value gap. Once we fill this fair value gap, what are we looking for? So it depends on your bias. If your bias is bullish, then you're looking, so once this fair value gap is filled, you see a price close above this. What you're looking for, you're looking for the price to go higher and enter a long position. Now, keep this in mind that using fair value gap is based on your daily bias. Either you are looking for a short or for a buy. Sometimes what happens is that, let's just remove this stuff over here. So sometimes what happens is that, let's say that price goes higher, comes in, and we see a close above it. You don't go in and enter the position over here. You just don't go and go long over here just because you saw a candle close above fair value gap. Why? Let's say that your bias is bearish, then you can do that, because what's gonna happen then? It's probably gonna come and disrespect this fair value gap and push lower. You understand? So fair value gaps you can use it based on your daily bias, and it's important what your daily bias is, either looking for a short or a buy. But now you know how to mark a fair value gap. We mark it from the top of this candle to the bottom of that candle. And keep this in mind that the price is always going to draw into a fair value gap. Now let's open the chart. Let me show you guys a few examples on the chart. Remove this. So we are currently on the daily time frame. So I can already see a lot of fair value gaps over here on the daily time frame. So if we look overall from here, let's look at it overall. On the daily, we broke our daily structure to the upside. Look, we made a high, a low, then a high, and then a higher high. We broke hourly, like a daily structure to the upside. Then what are we looking for? Probably our bias is going to be bullish. We broke daily structure to the upside, and then look, we do have a fair value gap over here. Look here, 1 candle, 2 candle, and the 3rd candle. Now how do we mark this? From the top of this to bottom of this candle. Now, as you guys can see, what happened, the price did come into this, fell into this fair value gap, and then what happens is that, boom, price really went higher. So you could have entered a trade like this. Now, I'm not gonna say that you should just trade based on the fair value gaps, because there is gonna be a lot of other confluences that you have to use before just using the fair value gap. One of them is like a fair value gap getting disrespected, order block, equilibrium, and a lot of other stuff that comes into trading. But we are focusing on fair value gap. So as you guys can see, price really went higher. Now, we do have another example over here. Look, we broke a daily structure to the downside. What do we have over here? We have a fair value gap, a bearish fair value gap. We mark it from bottom of this candle to the top of this candle because it's a bearish fair value gap and it's made of 3 candles. 1, 2, 3. It's only made of 3 candles, as you guys can see. You can't just come here, let's say that we have 1 candle, 2 candle, and second candle. This is not a fair value gap. Like these over here is not a fair value gap. Why? Because as you guys can see, the wick of this candle, like what you call a wick or whatever, is this candle is not the same way as this. Look, nothing has been filled into these over here. We have 1 candle with the wick, and then we have a big leg to the upside and a down candle. This candle hasn't been all the way filled. These orders haven't been filled. So what is gonna happen? For sure, the markets want to fill these orders. These people that were buying over here wants to sell. That's why the price is gonna come lower and fill it. Over here, you can't call this a fair value gap. As I said, like look, there's a big difference from these and that. There is no like big candle to the upside, and we don't have 2 small candles. So keep that in mind. That's not a fair value gap. The fair value gaps always look like this. Look, we have 1 small candle, and then we have a big leg to the downside, and we have another small candle. Now, look over here. So a lot of you guys would have, yeah, okay, price did come, fill into this fair value gap, yeah, but keep this in mind that these closed above this fair value gap. So this fair value gap got invalidated. This is not valid anymore. We can't use it as a bearish confluence. Like, look, okay, we broke our daily structure to the downside. Okay, perfect. Our daily is bearish. We are probably were bearish on the 4-hour. I think, yeah, so you guys can see we were bearish, but you can just go and enter the short position just like this over here. You see, okay, fair value gap got filled. You go and put a stop loss above that fair value gap and look for short. You can't do that. Why? Because the fair value gap got disrespected. It closed above that. So once the price closes above this fair value gap, this box, this area over here, that fair value gap is not valid. It's invalidated. It's not working anymore on our favor. Keep that in mind. So now what you could have used this fair value gap as, like, look, this would have been a perfect swing trade if you had taken this trade. Look, now I'm just talking to you guys why fair value gaps are very, very important. Look over here. Let me explain. We invalidated this bearish fair value gap. We closed above that. That means this is not, the price is not going to go lower because we closed above that. Then look, we broke a daily structure to the upside, and we did fill a bullish fair value gap and completely respected that. Look, you see, we respected this, closed above that. This would have been one of the best trades to take because we have a lot of confluences. One, we're disrespecting this bearish fair value gap. Okay, price closed above that. The second one, we broke a daily structure to the upside. The third confluence would have been, look, price did come, fill into this fair value gap, and we saw close above that. You could have entered over there, put a stop loss there, and target some other daily high or draw Fibonacci tool, because if there wasn't any liquidity up there. So I hope you guys understand the fair value gap, but let's go on lower time frame and let me show you guys a few other examples. So now let's just look at this leg down over here. Sometimes what happens is that if you have a lot of fair value gaps, they might not get filled. Like look, we have a fair value gap over here. It's a small fair value gap, but yeah, we have a fair value gap over here. Then we do have another fair value gap, a daily fair value gap over here, as you guys can see. So what happens, look, price did come into this, filled in, we respected that, price did push lower. Why? You don't want to wait for price to come and fill this fair value gap. Most of the time that's not going to happen, but you would have to keep this in mind. So we do have a fair value gap over here that got filled, reaction to the downside. And what is the fair value gap made of? 3 candles. 1, 2, 3. Look, we have one candle, then we have a big candle to the downside, and then we have another candle that wasn't started from there. The wick of this candle didn't fill into this candle over there. That's why. So let's go on the 5-minute time frame because it is on every single time frame. Look, over here we have 5-minute fair value gap. Well, let me just remove this. We have this 5-minute fair value gap. Yeah, perfect. Then we have another over here. Look, what happens? Price did come, fill into that. We saw a reaction to the downside. It came all the way. Maybe it took out this low and maybe some other 5-minute low. It even took out like most of this 5-minute liquidity to the downside. As you guys can see, it failed to take out these. And what happens? If we go on the 5-minute time frame back again, look, price did come and fill into this fair value gap. You need to have some stuff in mind. You can't just put your stop loss above this fair value gap sometimes. Why? Because if you have other fair value gap above that, the price might go and fill that fair value gap. As I said, price in the market is always drawn into a fair value gap or a liquidity. So what you could have done better over here, let's say that, okay, you saw a fair value gap get filled, perfect. You saw 5-minute break to the downside again, like look, we saw a big candle closing below that, boom, put the stop loss above this fair value gap. Why? Because you want to be safe. You don't want to get stopped out. Let's say if you had put it above this fair value gap, you would have been stopped out. Look, the price would have been stopped you out. So you put your stop loss above here, and your target should be liquidity from the downside. So this is huge stuff on the fair value gap. And it's kind of really easy to understand fair value gap, even it's on 1-minute time frame. I take most of my trades on 1-minute time frame over here, most of the time. So look, we have boom, a 1-minute fair value gap. This is not a fair value gap. As you guys can see, it's like not even closed. Like look, it's not a fair value gap because this candle and this candle, they are in line. We don't want to see that. As you guys can see over here on this one, it's not. We see a big gap over here. This is the gap that the market wants to come and fill. We do have another 1-minute fair value gap over here, as you guys can see. So fair value gaps is on every single time frame, and it's made of 3 candles, and it's really important in the market, as I explained a lot of times for you, like just now. And if you want to see fair value gaps, how I use them in my trades, you can watch my trade recaps, or I do a series where I'm trying to turn $50 into $25,000. You can watch there. I use fair value gap is one of my most important confluence for me to just take a trade. So this was just me talking about fair value gap. And if you guys have any kind of question, let me know in the comment. And we do have a fair value gap over here. Look, boom, what happened? As you guys can see, we have this hourly fair value gap. Price did come, fell into that. Look, price is going lower. So you could have taken this trade just like this candle closed below there. Boom, stop loss above this high. You just want to be safe. Take profit, maybe this. You need to keep in mind that you can't just take trades. Just let's say your bias is bullish over here. You see this fair value gap get respected, and you go just enter a short position. Why? Because if your bias is bullish, we do have another bullish fair value gap over here. So these might get respected and price could go higher. So it's important that you use your daily bias, you understand what you're looking for today and where the market is going. So daily bias is really important that you understand. Without daily bias, fair value gaps doesn't mean anything. So you need to understand that the price is either it's going lower or it's going higher. So either you're bearish on the day or bullish on the day. So as you guys can see over here, let's say that hourly broke structure to the downside, we saw fill into this fair value gap. Now it's filling into this fair value gap. If this fair value gap over here gets disrespected, if this candle can close below this, what that mean? That means only one thing. It is probably price is gonna go and let's say that we enter over here because the fair value gap got disrespected. And we want to be putting our stop loss above that. It's probably going to come and check out this low or either this liquidity down there. So keep that in mind. So let's say that why I put my stop loss here and not here. The only reason is that if this fair value gap gets disrespected, yeah, if this fair value gaps, let's say we close even below this and the price closes above this fair value gap again, that means the trade is invalidated. It's going to go even higher. So as you guys can see, we're seeing a big push to the downside right now. But yeah, it was too much. I talked too much, but now you would have to go on the chart yourself, mark out fair value gaps. Well, I see fair value gaps everywhere. Boom, we have another hourly fair value gap over here that hasn't been filled yet. But keep this in mind that use it based on your daily bias. Just don't go in the market say that okay, this fair value gap got filled. We saw close the candle closed above that as a bullish or as a bearish. You just go and enter. Don't do that because you're gonna end up losing the trade. And keep this in mind. Use it based on your daily bias, and you should be good to go. And I hope you understand this like fair value gap. And if you have any kind of question, just let me know in the comments and I will be there to explain and kind of like reply to your comments.